Chair Jerome Powell's remarks at the Jackson Hole Economic Symposium and the current state of the U.S. economy. Here are the key points. 1. Resilient U.S. economy. The U.S. economy in the summer of 2023 has been marked by a resilient consumer and better-than-expected economic growth. 2. Interest rate hikes. Chair Jerome Powell expressed the Federal Reserve's attentiveness to signs that the economy may not be cooling down as expected. If there's additional evidence of persistently above-trend growth, it could lead to further tightening of monetary policy, including raising interest rates. 3. Inflation concerns. Despite a decrease in inflation from its peak, Powell noted that prices remained too high. The central bank had not ruled out further tightening of monetary policy to combat inflation. 4. Market expectations. Data from the CME Group indicated that markets were pricing in a 55% chance that the Fed would raise interest rates at its November policy meeting. 5. Inflation and economic data. The Fed's preferred inflation metric, core PCE, showed prices increased by 4.1% in June, still well above the Fed's long-run goal of 2%. The article also mentioned positive economic indicators such as strong retail sales and wage increases. 6. Policy outlook. The strong economic data had led some economists to revise their forecasts, with some predicting unspectacular growth that avoids a recession while others anticipated more robust growth for the U.S. economy. 7. GDP growth. The Atlanta Fed's GDP Now forecast projected annualized GDP growth of 5.9% in the third quarter, potentially the most robust period of economic growth since 2021. 8. Inflation risks. Faster growth could pose upside risks to inflation, which may prevent prices from falling to the Fed's 2% target. 9. Data-dependent Fed. Chair Powell reiterated the Fed's commitment to data-dependent decision-making. The upcoming releases of the July PCE report and the August labor report would provide the Fed with more information on economic growth and inflation. 10. Fed's inflation goal. Powell emphasized the Fed's commitment to bringing inflation down to its 2% goal and its readiness to raise rates further if necessary. The Federal Reserve was closely monitoring the U.S. economy's performance and considering further interest rate hikes to address inflation and potential risks associated with strong economic growth. Powell's remarks indicated a cautious and data-dependent approach to monetary policy.